Every year, around tax time, I get some version of the same phone call. Matt, I just got my tax return back and I owe 150 grand. Sometimes it's 50, sometimes it's 300. But the second question is almost always the same. Is there anything I can still do for last year? The answer is probably not as much as you'd like. But there are a few exceptions that surprise business owners every year. And one of them can be incredibly powerful. We'll get to that in a few minutes. For context, I grew up around family-owned businesses, heating oil, excavation, and auto body shops. I started my own landscaping company as a teenager. Today, I spend most of my time helping business owners coordinate taxes, retirement planning, and long-term wealth decisions. And one of the biggest misconceptions I see is when people think tax planning happens during tax season. It doesn't. Tax preparation happens during tax season. Tax planning happens throughout the year. Stage 1 is before year end. This is where the vast majority of planning opportunities live. If we're having conversations in June, July, August, September, October, there are usually quite a few things we can evaluate. Entity structures, retirement plans, charitable planning, business succession, compensation planning. The specifics vary from one business owner to another, but the important point is this. Before year end, you have the most options. That's why proactive planning tends to create the biggest opportunities. You're making decisions before deadlines arrive. Not after. Now let's say the year ends. January arrives, then February, March. Have all the planning opportunities disappeared? Not necessarily, but the list is getting shorter. At this point, we're no longer changing most of what happened during the year. We're looking for opportunities that may still remain available after the year end. There may be retirement plan opportunities. There may be elections that still need to be made. There may be planning opportunities that haven't yet been finalized. The key point is simple. The closer you get to filing your return, the fewer options you typically have. Now, we're entering the most restrictive stage. That doesn't mean nothing can be done. Returns can sometimes be amended. Errors can be corrected. Certain issues can still be addressed. But we're no longer talking about broad planning flexibility. We're mostly dealing with a limited set of remaining opportunities. And this is why I often tell business owners that the earlier we start planning, the more choices we have available. Because taxes are often easier to influence before they happen than after they've already occurred. Look, every situation is different, so don't make planning decisions based on a YouTube video. Run ideas by your own advisors. Or if you'd like a second opinion, schedule some time on my calendar below. Now, let's talk about the exception I find myself discussing with most business owners. Retirement plans, specifically cash balance plans. If you're not familiar with them, a cash balance plan is a type of retirement plan potentially allow highly profitable business owners to make large deductible contributions. And unlike many tax strategies, certain contributions may still be made after the year end while creating deductions for the prior tax year. Now, this isn't appropriate for everyone. There are eligibility requirements, administrative requirements, ongoing obligations. Every situation needs to be evaluated individually. But this is one of the reasons I tell business owners not to automatically assume all opportunities disappear when the calendar flips to January. I've had conversations with business owners who thought they'd be completely missed their chance to do anything. Then we discovered they still had meaningful planning opportunities available. Not because we found a loophole, not because we got creative, but because certain planning strategies were still available under the rules. And if you've already received a large tax bill and you're wondering whether opportunities like this might still apply to you, this is exactly the type of thing we discuss during our introductory meeting. We'll talk through your business, your goals, and determine whether a tax strategy review even makes sense for your situation. There's a link below, but let's keep going. Here's what I don't want you to take away from this video. I don't want you thinking, great, I'll just wait until tax season every year. That's the wrong lesson. The lesson is exactly the opposite. The earlier you start, the more options you have. Let's say two business owners each receive a $150,000 tax bill. Business owner A calls in October. Business owner B calls in April. Who do you think has the most options available? Almost always it's the person who called in October before the year end. Because planning works best before the year is finished, before the transaction occurs, before the deadlines arrive, before the tax return is sitting on your desk. That's where most of the value gets created. When someone calls me and says, Matt, I just got a huge tax bill. What can I do? My first response is usually another question. When did we start looking at this? Because the timing matters. Sometimes there are still opportunities. Sometimes there aren't. But either way, the conversation is useful. If we identify something can still be done, that's great. If not, we can begin preparing for the current year instead of repeating the same outcome again. And frankly, That's where most of the meaningful planning happens, not fixing last year, improving this year. If you take one thing away from the video, let it be this. Tax planning is not a meeting that happens during tax season. It's a process that happens throughout the entire year. The earlier you start, the more flexibility you have. The more flexibility you have, the more opportunities you're likely to uncover. And that's why some business owners seem to have far more control over their tax situation than others. It's usually not because they're smarter, it's because they started planning earlier. If you'd like a second set of eyes on your situation, schedule an introductory meeting using the link below. We'll talk through your goals, determine whether a tax strategy review makes sense, and see whether there are opportunities worth exploring before the year gets away from you. Because while we can't always change last year, we can make better decisions for the year you're in right now.